All right, hey everyone, welcome back. We love to unpack these complex financial topics, and today we're going to dive deep into something that gets thrown around a lot: bull markets.
Yeah, it's one of those terms that people use but might not always fully grasp.
Exactly.
Hmm.
But lucky for us, we've got this super helpful YouTube video from Rakiza Vital to guide us. And this one, I got to say, it explains it in a way that actually makes sense.
I agree. They do a great job of breaking it down and making it easy to understand.
So let's just jump right in. What are we really talking about when we say bull market?
Okay, so imagine, right? A bull charging forward, horns up, like that classic image.
Yeah, I can see it. Powerful, right?
Exactly. It's
Yeah.
all about that upward momentum, that powerful force. And that's kind of the essence of a bull market. We're not talking about like a tiny blip in prices. It's this sustained period of growth in asset prices. And it really reflects this strong, like underlying confidence in the economy.
Hmm. So it's not just prices going up, it's about this feeling, this confidence that's driving it.
Yeah, exactly. Like, think of it this way. When investors believe the economy is doing well, they're more likely to invest, right?
Makes sense.
So you see, like, stock indices climbing steadily, more people buying and selling, that trading volume going up. It all feeds into this sense of optimism, and that fuels the upward trend even more.
Okay, so it's almost like a self-fulfilling prophecy. Positive expectations lead to more positive results.
Yeah, that's a great way to put it. And the video does a nice job of pointing out how things like good economic news, strong macroeconomic conditions like think GDP growth, low inflation, supportive monetary policies, all these create like the perfect environment for a bull market to thrive.
So it's like this perfect storm of positive factors coming together.
Right.
Okay, so we've got this idea of upward momentum, confidence, and strong economic conditions. But let's get practical for a second. If we're looking at the market, how do we actually spot a bull market in action? I mean, the market's always going up and down, right? So what are the signs that we're really seeing this bull at work?
Right. There's always going to be some fluctuation, but there are some pretty clear indicators that can help us differentiate a true bull market from just a temporary upswing.
Okay, I'm all ears. What should we be looking for?
Well, one of the most obvious is, of course, consistently rising stock indices. I'm not talking about like a couple days of gains, but a sustained upward trend over weeks or even months.
Okay, so rising stock prices, that's a big one for sure. And the video also mentions increased trading volume as a key indicator.
Absolutely. As more and more investors start to believe in the upward trend, they get on board and they start buying and selling more actively. And that surge in trading volume, that's a pretty clear signal that people are like putting their money where their optimism is.
Got it. So it's not just about how high the prices are going, but also about how many people are actively participating in the market.
Exactly. It's that collective belief in the upward trend that really drives a bull market. It's like as more people join the party, the music gets louder, the energy builds, and the market's momentum just keeps picking up.
Yeah, that makes sense. And I remember the video uses some great historical examples to illustrate this point, like they talk about the tech boom of the 90s, the whole dot-com bubble.
Oh, yeah, that's a classic example. You saw massive growth in the tech sector fueled by this like incredible wave of investor enthusiasm. Of course, it eventually led to a correction, which is something we'll talk about later.
Right. But even though it didn't last forever, it perfectly illustrates that bull market phenomenon.
Definitely. And another example the video brings up is the post-2008 market recovery. After the financial crisis, the market went through this like prolonged bull market.
That's right. And that one really shows how a bull market can emerge from, very different economic landscapes. It's not just about a booming economy. It can also happen during a period of recovery and rebuilding.
Exactly. And of course, we can't talk about bull markets without mentioning the elephant in the room, or maybe we should say the bull in the room, Bitcoin.
Oh yeah, how could we forget?
The video highlights how Bitcoin's rise has been a prime example of a bull market, specifically in that cryptocurrency world. That market is known for being like super volatile. Those price swings can be wild.
Yeah, talk about a roller coaster ride. But I guess the overall trend, at least until recently, has been upward, right?
Right. Upward, but with a lot of bumps along the way.
Which brings us to an important point. Even in a bull market, even when things seem to be going great, there are always risks involved. And understanding those risks is essential for anyone who's thinking about jumping in.
Oh, absolutely. We can't just assume it's all smooth sailing. We did definitely need to be aware of those potential downsides.
And I'm really interested to dig into those. But before we get into the potential pitfalls, let's switch gears and talk about strategies. For investors, especially those who might be new to all this, what are some of the things they should consider when navigating a bull market? What does this video recommend?
Okay, so the video really emphasizes the importance of having a long-term perspective. It's easy to get caught up in the excitement and chase those quick gains, but successful investing, it's about thinking long-term. Building a solid foundation for sustained growth. It's not just about riding the wave of short-term market fluctuations.
Right. It's not a sprint, it's a marathon.
Exactly.
And I imagine this long-term thinking ties into their advice on diversification as well, right?
It absolutely does. Diversification is key, especially in a bull market.
Right.
It can be tempting to put all your eggs in one basket, focus on that one hot sector that seems to be skyrocketing.
Yeah, I can see that.
But, the reality is not all sectors perform equally well, and a diversified portfolio helps you weather those inevitable market fluctuations.
Don't put all your eggs in one basket, so to speak. Spread the risk, spread the love. And another thing that stuck out to me in the video was the emphasis on research. We can't just jump into things blindly based on hype or what everyone else is doing. We got to do our homework.
Oh, absolutely. Don't invest in companies just because they're the talk of the town. Take the time to understand those fundamentals, their growth potential, their position in the market. Really look beyond the hype and make those informed decisions based on solid research.
So research, research, research. It's not just about riding the wave. It's about choosing the right wave to ride.
And making sure you've got a sturdy surfboard.
Exactly. And speaking of sturdy surfboards, the video dives into some really smart strategies for managing risk during a bull market, which is what we'll talk about next.
It's funny. We often associate bull markets with excitement and opportunity, but the video does a great job of reminding us that there's another side to the story.
Right. It's not all sunshine and rainbows.
Exactly. Even in a market that seems to be going up and up, there are some inherent risks we can't just ignore.
Totally. And the video doesn't shy away from those risks at all.
Yeah.
In fact, it jumps right into one of the biggest pitfalls of a bull market asset, overvaluation.
Yeah, it's easy to get caught up in that frenzy when you're seeing those prices climb and you start thinking they'll just keep going up forever.
Right. It's never going to end.
Exactly. But the reality is during a bull market, the perceived value of assets can get ahead of their actual underlying worth.
So it's like a disconnect between the market's enthusiasm and the true value of those assets.
Exactly. And that can create a pretty precarious situation, like a bubble that's just waiting to burst.
Oh, that makes sense.
Even a minor setback, a bit of bad news, or just a shift in investor sentiment. Those things can trigger a pretty significant market correction when things are overvalued.
So it's like that classic saying, what goes up must come down.
Pretty much.
Yeah.
And another risk the video warns about is investor complacency.
Oh, yeah, that's a good one.
When things are going well for a long time, it's easy to become overconfident and maybe let our guard down a bit.
Just human nature, right?
Totally. We start thinking the good times will last forever, and that can lead us to make some, less than ideal decisions.
Like what kind of decisions?
Well, we might not be as diligent with our research, or we might take on more risk than we normally would, thinking the market will just keep going up and bail us out. But that's not always how it works.
Definitely. And you know what else the video mentions? Those unexpected external events.
Oh, yeah. Those can really throw a wrench in the works.
Those unforeseen geopolitical events, economic crises, things that are totally outside of our control.
Yeah.
And they can just send those shockwaves through the market and disrupt even the strongest bull market.
Absolutely. It's a good reminder that even when things seem to be going, great vigilance is key.
Always got to be prepared for those curveballs.
The video uses this analogy of riding waves, which I think is a great way to think about market cycles.
Oh, I like that.
Bull markets are like those powerful swells that lift us up, but eventually they crest and break. And knowing when to adjust our approach is key to navigating those shifts effectively.
That's a really helpful way to visualize it. So no bull market lasts forever. They're just a natural part of this market cycle.
Right. They're like those waves we were talking about. They come and go.
So what are some of the things that can signal the end of a bull market?
Fact.
What should we be watching for?
Well, one of the things the video points out is demand exhaustion. At some point, that buying frenzy starts to cool down.
Yeah.
There aren't as many new investors jumping on board, and that upward momentum, it starts to lose steam.
I see. So the party's starting to wind down.
Exactly. People are still having a good time, but the energy is not quite the same as it was a few hours ago.
I get it. The music's still playing, but people are starting to head for the door.
Right. And then changes in economic policy can also have a big impact. If central banks decide to start raising interest rates to cool down inflation, or governments tighten fiscal policy, those things can put a damper on economic growth and investor sentiment.
So it's like someone turned down the music and turned on the lights.
Yeah, suddenly everyone's a little less enthusiastic about staying.
Makes sense. And then, of course, there's always that risk of those financial bubbles.
Oh, right, those periods of excessive speculation where asset prices get inflated far beyond their actual value.
Like the dot-com bubble we talked about earlier.
Exactly. It's important to remember that not all bull markets end with a bubble bursting, but it's definitely a risk to be aware of.
For sure. So we've got demand exhaustion, changes in economic policy, and the potential for financial bubbles. All things that can signal the end of a bull market.
Right. So to sum it up, bull markets present great opportunities for growth, but we have to be mindful of their finite nature. They don't last forever.
Absolutely. So that means having a plan for when that bull eventually decides to take a rest.
Right, exactly.
Right.
We need to be prepared for that descent.
Okay, so let's talk about that. What are some things investors can do to prepare for that downward shift? The video offers some helpful advice on this, right?
It does. And it's not about panicking and selling everything as soon as you see a little dip. It's about making strategic adjustments to protect those gains you've made and position yourself for the next phase of the market cycle.
Right, playing the long game.
Exactly. So one of the first things the video recommends is reviewing and adjusting your portfolio as the market shows signs of topping out.
Okay, so taking a look at what you're holding and maybe making some changes.
Yeah, it might be wise to reduce your exposure to some of those riskier assets that have really soared during the bull run, especially if they seem overvalued.
So maybe trim some of those high-flying tech stocks or those speculative investments, things that have seen the biggest jump in price but might be the most vulnerable to a correction.
Right. And you might consider allocating a portion of your portfolio to what the video calls safe haven assets.
Safe haven assets. I've heard that term before, but could you explain what makes them so safe?
Sure, they're called safe havens because they tend to be less correlated with the stock market. So when stocks are going down, these assets might not go up, but they're likely to hold their value better, providing a buffer against that volatility. It's like having a stable anchor in your portfolio that helps you weather the storm.
That makes a lot of sense.
Yeah.
So as the bull market starts to lose steam,
Mm.
we might shift some of our holdings into those more stable assets to help protect our overall portfolio.
Exactly. A good strategy to consider.
So we've talked about adjusting our portfolio and considering those safe haven assets. What else can we do to prepare?
Well, the video also emphasizes the importance of maintaining liquidity.
Liquidity. Okay, and what does that mean in this context?
It means having some cash on hand. So you have the flexibility to seize opportunities that might arise during a market correction.
Yeah.
You'll be ready to buy those dips.
Ah, so we can be ready to snag those bargains when everyone else is selling.
Exactly. You'll have that firepower.
And remember that long-term perspective we were talking about earlier. That's even more crucial during this phase, right?
Absolutely. It's easy to get spooked when the market starts heading south, but we need to remember that these market cycles are natural. What goes down will eventually come back up.
It's like riding a roller coaster. There are going to be ups and downs, but you just got to hold on tight and enjoy the ride.
Exactly. Having that long-term vision helps us stay the course and avoid making those rash decisions based on short-term market fluctuations.
Right. It's about keeping our eyes on the prize and not letting those dips derail our long-term investment goals.
Exactly. And this is where discipline comes in. The video really stresses the importance of avoiding both euphoria during a bull market and panic during a bear market.
So it's all about staying calm and collected no matter what the market throws at us.
Right. Sticking to your investment plan and not letting those emotional reactions dictate your decisions.
Makes sense. So discipline is key.
It really is. And the video gives one more really interesting piece of advice that I think is worth highlighting. All those profits you've earned during the bull market,
Yeah, what about them?
reinvest them.
Oh, that's a good point.
It's tempting to just spend those gains, but reinvesting them allows you to further strengthen your portfolio and prepare for future market cycles. It's like taking those winnings from the casino and putting them right back into playing, but in a much smarter, more strategic way.
I love that analogy. So we're using those gains to fuel future growth and create a virtuous cycle of investing.
Exactly.
Mm.
So we've covered a lot of ground here, from spotting the signs of a bull market to navigating those potential pitfalls and preparing for that eventual descent.
It's been a really insightful journey.
It has. And before we wrap up, I think there's one more important point the video makes that's worth reflecting on.
Oh, I'm intrigued. What's that last nugget of wisdom they leave us with?
It's this idea that, while understanding bull markets is super important, it's just one piece of the puzzle when it comes to successful investing.
Right. It's like one tool in our toolbox.
Exactly. The world of investing is constantly changing, right? There's always something new to learn, new things to understand about how the markets work.
So true. It's like this ongoing learning process.
Exactly. And the cool thing is there are so many resources out there to help us, deepen our understanding. Books, articles, podcasts like this one. We can keep learning and growing as investors no matter what the market's doing.
It's almost like we've been given this map and a compass, and now we get to set out on our own exploration.
That's a great way to put it. And that's what makes this whole deep dive so valuable. While bull markets, they're exciting, they offer that potential for growth, it's really the knowledge we gain and the strategies we develop that, ultimately determine our success as investors.
It's not just about riding the wave. It's about becoming a skilled surfer.
Exactly. Someone who can handle any condition.
I like that. So let's recap what we've covered. We started by defining a bull market, that period of sustained growth, all fueled by investor confidence and those favorable economic conditions.
Right. And we talked about how to actually spot one in action, those telltale signs like rising stock indices, more trading volume, positive economic news.
And we didn't shy away from the risks either. Asset overvaluation, investor complacency, those external factors that can throw everything off course.
Absolutely. It's important to be aware of those.
Then we dove into those strategies for navigating a bull market wisely, that long-term perspective, diversifying those portfolios, doing our research, and managing risk.
And of course, how to prepare for when that bull market eventually comes to an end. Reviewing our portfolios, thinking about those safe haven assets, maintaining liquidity, and, most importantly, sticking to our plan and not letting those emotions drive our decisions.
Such good advice. It's been a really insightful journey unpacking all these insights from that Riqueza Vital video.
I agree. It was a good one.
And as we wrap up this deep dive, I think there's one final, thought-provoking question to leave our listeners with. We talked about how bull markets are driven by that collective belief in future growth. So what happens when that belief starts to waver?
Oh, good question.
What are those early warning signs that investor sentiment is shifting? And how can we, as individual investors, try to anticipate those subtle changes in the market?
That's a great question to ponder. It's almost like trying to predict the weather patterns of the market, right? Looking for those subtle shifts that might signal a change on the horizon.
Exactly. Definitely gives us something to think about. And who knows, maybe that's a topic for a future deep dive.
Maybe it is.
But for now, a huge thank you to everyone for joining us on this exploration of bull markets.
We hope you found it helpful and insightful.
We hope you learned something new, gained some valuable insights, and you feel a little bit more empowered to navigate this exciting world of investing.
Don't forget to subscribe and stay tuned for more deep dives into all sorts of fascinating subjects.
Until next time, happy investing, everyone.